We do see the dollar weaker against all major trading partners, even though expectations are for the Fed to hold pat and for the ECB to cut sooner. Why do you think we see this movement in currencies, and what do you expect from central banks?
You know, I think it's really interesting. I mean, clearly, since the beginning of this year, the majority of the reason that the dollar has fallen is because the market has thought that the Fed would come in and cut interest rates. Now, that, of course, sort of looks through the fact that tariffs are also being inflationary, and that stands true for the other G10 central banks, and the possibility that reciprocal tariffs on the US could also raise inflation projections elsewhere as well. So we have right now, you know, this growth concern that seems to be the predominant focus of the markets. But I think for the dollar, the fact that we haven't seen today the safe haven flow into the dollar, we've seen it into the Swiss franc, we've certainly seen it into the yen, but we haven't seen it into the dollar. And I wonder if this is because the market is wondering whether or not, A, there's going to be an acceleration of de-dollarization, perhaps because of the isolationist policies that Trump is backing. If so, perhaps that's a little bit premature. But the other reason, you know, is the market wondering whether or not Trump will try and push for some sort of accord to weaken the dollar, you know, to tie in with these tariffs? And if so, could that happen relatively quickly? Could that happen this year? So I think there's a couple of ideas, excuse me, kicking around, but I think the major reason that the dollar has fallen is this perception that the terminal rate of interest from the Fed could be lower than it was perceived before. And for that reason, what Powell has to say tomorrow is going to be very interesting.